Welcome to The Explainer. Today, we're diving into a financial report about a company that's pretty much the bank for one of the biggest energy projects on the entire planet. I'm talking about India's Green Revolution. And the company at the heart of it all? REC Limited.
All right, let's start with just one number from this whole report. 40%. Now, 40%, it might not sound like a huge number on its own, right? But trust me, as we get into this, you'll see how this single figure tells you almost everything you need to know about this company's sheer influence.
This brings us to the big question that a recent stock analysis report asked. What if you could invest in the one company that's financing nearly half of an entire country's power sector? I mean, that's a massive idea, right? And today, we're going to unpack the report that tries to give us an answer.
Okay, so to really understand REC, you first have to get your head around the massive opportunity it's sitting on. And it all begins with India's huge bet on a totally new energy future. So India has set this wild goal to build 500 gigawatts of renewable energy capacity by 2030. Now, to put that number in perspective, because it's kind of hard to imagine, that's more than the entire power capacity of Germany and the UK combined. Yeah, we're talking about a colossal undertaking.
And look, this isn't just about slapping some solar panels on roofs and putting up a few wind turbines. No way. This requires a complete nationwide overhaul of the entire power system. We're talking about modernizing the grid, getting reliable electricity to every single village, and, the big one, securing the country's energy independence. It's a revolution from top to bottom.
So who's at the center of all this? According to the analysis, who's the one writing the checks for this massive multi-billion-dollar project?
Well, that brings us right back to REC Limited. They're the main financial institution for India's power sector. The simplest way to think about them is like a specialized bank. A bank with heavy government backing whose one and only job is to fund everything from the giant power plants all the way down to the transmission lines. Hey, remember that 40% number from the beginning? Well, this is what it's all about. REC finances a whopping 40% of all power projects in the country. They're not just a player here, they are the player, the dominant force.
And that kind of dominance, well, it's created what investors call a competitive moat, a powerful advantage that's just really tough for anyone else to get past. Think about it. They only do power financing, so their expertise is incredibly deep. Their scale means they can fund projects that other lenders just can't touch. And those government ties, that gives them a level of stability and access that's pretty much unmatched.
Okay, so that's the big picture. Now, let's dive into the financials. Let's take a look under the hood, as the report does, and see if the engine room is as impressive as its spot in the market.
First up, let's talk revenue growth. Between fiscal years 2021 and 2025, the company's total revenue just shot up. And to give you a sense of scale here, we're talking about an increase of around 100 billion rupees. That's over $12 billion in annual revenue. So yeah, this is not a company that's just hoping for growth, it's actively delivering it.
But it's not just about earning more. It looks like they're lending smarter too. A few years back, almost 5% of their loans were what they call non-performing. Basically, loans that were at a high risk of never getting paid back. Well, they've managed to slash that risky portion by more than half, bringing it all the way down to just 2.1%. That's a really strong signal that their risk management has gotten a lot better.
So what about stability? I mean, how safe is this operation? Well, for any lender, there's this key number called the capital adequacy ratio. Think of it as a financial cushion, right? It's the money they have set aside to absorb any unexpected hits. At 17.8%, RE's cushion is way above what the regulators require. This means they're not just safe, they've got the financial muscle to go after all those huge growth opportunities we talked about.
Okay, so the company looks pretty strong right now. But what about the future? Let's dig into the report's take on REC's strategy for growth and, importantly, what it all means for its value as an investment.
And this is big. The company is making a major strategic pivot. Essentially, it's going all in on green energy. The goal is incredibly ambitious. They want renewables to make up 60% of their entire loan book in just a few years. I mean, REC is clearly trying to position itself as the #1 financier of India's green revolution. No question about it.
So, how do analysts even figure out if a stock is a good value? Well, one of the main tools they use is called a discounted cash flow analysis, or DCF. It sounds complicated, but the idea is actually pretty simple. You try to estimate all the money the company is going to make in the future, and then you calculate what all that future cash is worth if you had it in your hand today.
So, after crunching all those numbers, What did the financial model come up with? The analysts landed on a target price of 650 rupees per share. Now, at the time this report came out, that number suggested the stock still had about 20% room to climb.
The report also puts REC side by side with its competitors, and on a couple of key metrics, it looks pretty darn attractive. First, its price-to-earnings ratio is lower. Just think of that like a price tag. It basically means you're paying less for every dollar of profit the company earns. At the same time, its return on equity is higher, which means it's better at turning investors' money into even more profit. Lower price tag, better performance. Kind of what you want to see.
All right, so after digging through the huge market opportunity, the company's financial health, its future strategy, and the valuation, what's the final verdict from this report? What's the bottom line?
The report's final verdict is a clear buy recommendation. And the reasoning is pretty straightforward. REC isn't just another stock. It's seen as a direct way to invest in the entire India growth story, and more specifically, its enormous transition to green energy.
But of course, no investment is a sure thing, right? And the report is careful to give a balanced view. It highlights some really important reasons to be cautious. For one, the company's success is super dependent on government policy. It's also completely concentrated in just one sector. And of course, there's always the risk of rising competition. These are definitely crucial things any investor would need to think about.
And really, that brings us back to the core idea of this whole analysis. You've got this financially solid company with a dominant grip on its market, and it's tied directly to one of the most ambitious national projects happening anywhere in the world. The report makes a compelling case. So the question it leaves us with is pretty simple. REC is betting big on India's green future. Should investors bet big on REC?